It's the most important FOMC meeting once again until, of course, the next one. So in today's video, we'll have a look at what are the best trade opportunities. I do have a whole list of things that I want to discuss with you guys today. A whole bunch that's lined up. So smash the like button, hit the bell notification, and subscribe to the channel. Things that we're going to look at quickly is the low time frame gaps and potential SR flips happening on the S&P 500 as well as the Dow Jones. There may be a short-term trade opportunity around the US Open, which is going to be later on today. We have a TD sequential 9 buy that's going to be taking place on oil that could potentially bounce oil out of that golden pocket. Also something we've been focused on. Oil is looking heavy, but we'll see. Can the TD sequential save the oil price, or are we going to distribute further down? We have the tankers, which are looking very good as well, part of that oil trade. So if oil does bounce, of course, the tankers are going to move further into those profit zones since we've entered into those trades quite a while ago. We have soy and wheat also bouncing off of pretty key areas. I know we haven't outlined the energy trade for quite some time. With oil coming down, typically you see the energies beginning to struggle. So soy and wheat kind of tying into that whole narrative and bouncing off of those levels. Could that be a further indication that oil is going to bounce here, right? We'll have a look at those charts as well. We have the Caterpillar long trade set up, and then we have a lot of pressure happening for MicroStrategy and STRC, right? A lot of pressure over there on those trades. So again, smash the like button. Let's get straight into it. We're having a look over here. FOMC projections, economic projections coming out later on today. Federal funds rate coming out today. And then, of course, we have Warsh, which is going to be having his first press conference. And the whole market's waiting to see what happens. The expectation, however, is at 99.6% probability that the target rate will remain exactly the same and there'll be no change to the interest rates. Remember, we just saw Japan raise it to the highest levels in 35 years, as well as many other countries, right? I'm not pulling up the list today, but there are other countries also raising their interest rates. So if there is any kind of a surprise factor that comes into play over there, that will definitely affect markets negatively. I don't think that's going to happen. I think the probabilities over here are very, very, very accurate, but it's just something to be aware of. And if you do get a little bit of pullback, a little bit of shakiness coming into, of course, maybe it's going to be the FOMC speech where Warsh does actually come out and chat. You're going to be looking at this level over here. Dow Jones, we've officially hit our final take profit. I do want to remind you, we took 40 to 50%. I took 50% specifically off of my positioning. And I told you I'm going to leave the rest on the table as long as the trend remains up, high highs and high lows. That's the name of the game. The next throwback level that you're going to be looking at is 51,500. If you get a throwback into that zone, you find major support over there. This is also a gap that occurred over here in the futures market at 51,500. Look for the little bit of a bounce off of that. That could be an opportunity for anyone that wanted to get long. Maybe you missed out and you're looking for an opportunity over there. That would be the trade. For me, I'm just going to continue to hold that 50% exposure. And then we have something similar, of course, on the S&P 500. And you got your bounce zone coming in at 7,500. So look for the pullback. If you get that pullback into the EMA, that's a 200 EMA on your hourly time frame, as well as your gap over there, this is going to be a notable area where you want to find major support. So with that being said, let's get on to oil, right? Very quickly looking at oil over here, you can see on the daily time frame, TD sequential 9 buy. The last one happened at around that $56 region, and that took oil all the way up to about $120. So a pretty big move over there. You came in for another 9 buy, elicited a small bounce. You went from 92 to about 100. So you got a decent bounce, almost 10% over there, followed by the next leg down. And now sitting at this 80 region, we can go onto the actual oil chart. You have, again, another TD sequential 9 buy. It's looking very heavy. You've got no reaction out of the zone. This is meant to be the key range low. 200 EMA on the daily time frame, additional confluence, which typically would win at least stack with a key support level like a horizontal over there. And a golden pocket in terms of your Fibonacci levels is your 0.618 and 65. 3 points of confluence would suggest that typically you'd at least bounce over there, but you've got no bounce, right? This has been very weak all the way down. So therefore, if you do get the TD sequential 9 buy and it elicits a small bounce similar to what we saw in the previous one over there, consider that a corrective bounce within what may now be distribution, which means you're looking for something like this, right? If this does start to bounce over here and maybe you long too late, Maybe it took longs up here, maybe it took longs up here. This is going to be an opportunity for probably what would lead then into another lower high, and then ultimately you can start to alleviate some of the pressure of your long trades over there. Alternatively, if you do see oil bounce off of that TD sequential 9, starts to reclaim over here and it's going to take weeks, right? This isn't going to happen overnight, but if it starts to reposition into strength over here, recapturing some of these key levels like the $90 region, that's going to be your key 50% zone, then oil actually may be going back into a position of strength. So if oil moves into strength, the tankers will do very well. And we can have a look at those tankers super quick over here. You got, of course, let's just move that up. We got Frontline PLC, so FRO is the ticker over there. Very strong, moving into this region. Perfect back test yesterday and continuation onwards and upwards. At this point, I feel comfortable enough to eliminate the risk entirely on this trade by moving the stops to break even. And I would like to see continuation of FRO. So holding that trade still. TNK, we can move on to that. A little bit slower than what we're seeing on FRO, but TK tankers still doing decently. You still have an opportunity. Maybe you've missed out on the entire trade. We got in on the initial entry down here at 62. So in the money on the first trade. The second trade over here, you basically have an opportunity to position right here. I spoke about it yesterday as well, and I'll just briefly mention, you could go with a tighter stop loss over there at about just under $72, right? I'm leaving a loose stop for now, but you could theoretically put that stop at 72 if you want that tighter stop. And we can do the same thing on STNJ, right? Or STNG, excuse me. So Scorpio tankers, we got the stop loss nice and loose, sitting at 71.50. You could theoretically move it up over here. I think that's a pretty safe stop at 75.60, meaning you're taking on a whole lot less risk. So that is the tankers. If oil goes up, tankers go up. And of course, there's re-escalation with the Middle East, which I, of course, do not want. I would do anything for peace if I could have it that way. But the charts are the charts, right? So if there is any kind of escalation, expect that those are going to go up. Oil's going to recapture that $90 region and then probably push up. I must say, oil doesn't look like it wants to do that right now. Oil does look definitely weak, and it's kind of showing a different picture to what we're seeing within the tanker sector, as well as what we're seeing over here when it comes to soybeans and wheat, which is bouncing off of those key levels, right? We waited for probably a couple of months for soybeans to come back into this level, testing that golden pocket. We're now assessing, are you getting a beautiful reaction out of here or not? You're getting a reaction. Is it a beautiful reaction, right? Enough to really get this thing sending? Not yet, right? We've got a lot of work to do. This could easily fail into a lower high and then begin to distribute, which means if you took this trade over here at the 1090 region, which is exactly where we outlined months ago, you want to see this begin to move towards the upside. And really, it needs clearance of about $12. If you can get above $12, soybeans is on its way up. Uptrend is intact and should continue to move higher. I expect it to be a dogfight over here. I don't think it's going to be very easy. I expect probably a whole lot of chop, something like this. You might get multiple opportunities into that $11 zone if you just want to be patient on that trade. And then we got the same thing on wheat over here. Taking, I believe, our first entry down here at about 5:30. Second entry came into this candle over here, which was almost full retrace, right? This candle came in at 560. Big move up. I think it ran like 20-something% off of that second entry over there. There you go, 20.4% all the way back down, right? Big drop off of that. After the 20% move, you got a 16% drop. Came into the 200 EMA, starting to get a bounce, starting to get a reaction. But this has been a strong move down that theoretically took out your last high low. So this has created a lower low, which means you have to be open-minded. There is a real chance that even off of this bounce, you're just going to set in a lower high, and then you might move deeper into this. And very similar to soybeans, it might be a dogfight to, again, flip this region. I wouldn't be surprised to see something like that, right? Of course, first to move up, so probably something like this, and a little bit of chop and reaccumulation within this region on wheat. So that's soybeans, that's wheat. We've covered the tankers. We've covered the TD sequential 9 buy on oil, the S&P 500 and the Dow Jones on the low time frames for those pullbacks. Now we can quickly have a look at Caterpillar, MicroStrategy, and STRC, and then we'll move on to crypto, which I'll give you a very quick update on. So going on to Caterpillar, which we also outlined that long trade over there. It's also in the money, right? Moving really nicely. We scaled into that trade. I believe I got my average entry into this around this like 865, right? 865, give or take. I'm going to leave the stop loss in the same place. give it a little bit of breathing room, and hopefully we start to close multiple candles anywhere here or higher, because that would lead to continuation. And then we know that we're in the money on that trade, right? So that's Caterpillar, the big earth movers doing very well over there. And then we can go into MicroStrategy, which is now starting to reject, right? This is where you need to be quite careful, because if this is a bearish bear flag that's going to be breaking down, just quickly to compress this and re-highlight everything over here for you guys. We have been short on this for a very, very, very long time, but anytime that you see a strong move towards the downside, right, and you start to create that flag, this breakdown over here and confirmation could really accelerate things down. Now, I want to be clear, if MicroStrategy does go lower, I do think that $50 is going to be a very good area to possibly consider if Michael Saylor is going to obviously remain big in the game, and he has the ability to do what he's done in the prior cycles, then MicroStrategy does tend to be a massive outperformer, both to the up and the downside, right? So huge moves towards the upside. It's like a massive leverage bet on Bitcoin. So there could be a trade over there, but we'll see, right? Around $50 was always the target, looking for that 90% drawdown from the high to the low. And then if we look at STRC, this is getting a bit scary, right? A little bit scary over here, because you don't typically want this thing to hang around this long underneath these levels. We had spoken about this previously, so I'm not going to go into detail around that, but we highlighted that usually from breakdown to reclaiming back up to that 100 mark, which is where it's meant to maintain that parity, usually don't spend this much time down here, right? You're spending a lot of time over here. You're coming all the way back down to 91. It does get a little bit sketchy over there. So I think probably something to focus on in case some cracks begin to emerge over there. So that is for the traditional market, right? Gold, metals, so silver, gold, still looking to reclaim those key levels outlined yesterday. I'm not going to go over them again. Just go back to yesterday's video. If you do want to trade the low time frames, you can see over here, Farouk, who's one of our traders and coaches in whale rooms, absolutely been crushing it, locking in 50 to 60 pips on the first trade, 130 pips on the second trade over there. Good stuff. For any of you that want to take advantage of that and you're already in whale room, remember, you guys need to check out these other sections, right? It's not just me that's in there, right? These guys are hired full-time, right? They do much more than me when it comes to the Discord. So go and check out their sections over there. And if you want to trade any of these traditional market-related things, there's a crypto-friendly place. It's BTCC. You're getting up to 40%, right? 40%, not up to. It's actually, you're getting 40% if you use the link in the description below, range for you guys. 40% off on your trading fees. You can trade SpaceX and all those things, which we can quickly have a look at SpaceX, right? So big daily wick over there. Of course, this is still early days. This thing can easily continue to melt back up. This candle's already getting bought up over here on the hourly. So easy continuation. Typically with these IPOs, the first couple of weeks present massive upside as there's a lot of hype around the IPO. And then we've spoken about this a whole lot. Once a local top is established, you're looking at anywhere between 60 and 70% sell-off within a 1-year period of that local top occurring, right? At some point within 1 year. So if you want to be a long-term holder of SpaceX, they say don't bet against Elon Musk, right? So if you don't want to bet against Elon Musk, one of my fellow South Africans, then you can consider when you get that big drawdown, that's going to present a much safer entry. So it could theoretically even be at a high price. If this thing just keeps melting up for a couple of months, you could theoretically be buying at a high price, but it's about that drawdown already happening, getting that first and major flush, and that establishes a strong base, 60 to 70% down off of the local top. That's where you get your better and safer entries, right? So something to consider over there. Let's race through very quickly crypto, right? I want to go through this all pretty quick. Very similar long to short ratio as what we've seen all the other days. Positive 1.28% skew. I wanted to look as well at some of the sentiment because we've seen this fluctuate from last week 9%, now up to 22% on the fear and greed index over there. And if we go through to that and we have a look at the search interest over time, there isn't much search interest, right, on Bitcoin, which is very similar to what we're seeing on this chart. It's almost the same chart. If you look at this chart, the daily exchange volume, 7-day moving average, must reposition up to have a sustainable run. And we just haven't seen that, right? There's Bitcoin, there's ETH. Look at that search interest, just absolutely tanking. Look at the search term, altcoins, nuking, crypto, nuking, right? Cryptocurrency as well, very, very, very low. And it's putting in lower highs, which of course is never a good thing. So therefore, it's better to remain with the king, which is Bitcoin. And then you can look to other things if new excitement comes into the market and we do see that daily exchange volume moving back towards the upside. Quick look over here at what's happening on the DXY. You can see the DXY does have the potential, if you get a couple of strong candles over the course of this week, it has the opportunity to put this in as another high low, right? So something like this. And if you do move or position up to 100.5, real chance of a big breakout, which is of course going to affect that USDT dominance that we so eagerly look at every day. And looking at it on the 12-hourly time frame, it's trying to hold the 50 EMA, right, on the 12-hour period. It's trying to hold that 50 EMA. You got this big move up, call it, a bull flag, bull pennant, huge move up followed by a correction and consolidation into key support over here. If these 12-hourly candles begin to close above 8.653%, this could easily lead to a bigger breakout, and this will start to look like a high low and will probably move up alongside the DXY. So you would still be looking for, if you're a bull on crypto or Bitcoin, you want this thing to break down. And theoretically, on the 4-hourly time frame, you have started a downtrend. Lower lows, lower highs, right? Lower lows. And as long as this puts in another lower high and rejects over here from about 8.5%, the downtrend does persist. But you need to look at that, confluence between what's happening on the high time frames, like the daily and the 12 hours, and tie that in with those low time frames, because the weekly is still strong. So if the 12-hour bounces, the daily bounces, then ultimately the weekly is going to move back into the zone. And that's where the context comes into play. Touch 1, touch 2, touch 3, touch 4. The fifth one is almost inevitably going to break out, right? So if you come in for a fifth test into this region, there's going to be trouble for the Bitcoin bulls, and you should see that trending much higher. So bears, at least the USDT dominance bears, want to take control of this. They want to drop this below that big weekly candle, 7.5%, and continue that downtrend. We have Bitcoin, which is still not bullish yet, right? We definitely have the potential for a swing failure pattern, which I can just show in terms of this trading range over here. You had a minor sweep of that low. We did speak about it live at the time when it was happening. But for now, it's got a lot of work to do. The same way you want that USDT dominance, if you want to be bullish on the market, you want USDT dominance to take out this weekly candle from the first week of June. Well, on Bitcoin, you want to do the same thing. You want to take out this candle over here, and you want Bitcoin trading above $74,000. That will confirm that the swing failure pattern has put in some sizable momentum and is attempting to clear this entire zone. Otherwise, for now, big resistance. We've spoken about that, paired up with a drop-off in volume as prices moving up exactly into the rejective zone. The rejective zone is between $68,000 and $72,000. That is the troubled zone for the bulls. And that is the control zone for the bears. If bears are in control, they should reject price from there, and you should start to see another lower high form. So it's anyone's game. We're getting close in terms of getting a decision at this point, right? So that's your inverse fair value gap over there. And then again, you can see lining up with those TD sequentials as well. We're coming into that 9 top. You can see 7, 8, 9 starting to fade over there. We're in a bear moon period. So if you do get that rejection, I guess don't be surprised, right? It's at least that's what the market's calling for. So how do you trade this on the low time frame? Leading into, of course, the FOMC later on today, I'd be most focused on the Monday range. So if you look at the Monday range over here, you're basically looking for any kind of a sweep that drops down into like 64,540. If you drop into that zone and then reclaim the Monday low, that might open up a long trade opportunity where you can trade that back to the high. The alternative is true, right? If you move up into the high above the Monday high at 67, 68,000, remember, tie that in with those dailies. This becomes your rejective zone where you need to be cognizant and aware that there's a high probability that price would reject there based on the daily downtrend. So if you move up into that zone and you drop below the Monday high, that could present a shorting opportunity, right? So again, just study this, paired up with your momentum oscillators, whatever you're using, your RSIs, your MACDs. Everyone has their own momentum oscillator that they're using. For now, the hourly is definitely more geared in favor of a move like this, right? Price come down, reclaim. This is starting to turn back up. This could easily lead to one more push up, right? Maybe you do something like that. That's just in the very short term, the hourly time frame. So we can see, though, that there will likely be a flush at some point, at least towards the downside, to test the conviction of the bulls and the late traders that have put on high leverage positions. Because if we go through onto the deltas over here, looking at High Block Capital, which we dropped this information, of course, in Whale Room, you can see the market is pretty aggressively long, right? There's a lot of longs that have built up over here on most of the major coins. And we can see the same thing over here on the liquidation heat map. If you look at that weekly time frame, you can see over here, right? You got around that 73 million in terms of liquidity, which is just below that Monday range that is probably ripe for the taking. So again, we dropped that in Whale Room. And again, make sure you look at the traders, right? Not just Farouk, but the other traders as well. If you look at Waz, he nailed this long, coming off of that swing failure pattern, entering at $60,000, basically coming into the point of control now, which is lined up similar, very similar to what I'm looking at in terms of those daily resistance levels, inverse fair value gap, point of control, final TP over there. So it's all linked in the description below if you do want to check it out. BTCC over here. There's the link for you. And then, of course, you can follow me on X. You can also follow me on Instagram if you want to see where I'm at in the world right now. You'll notice I'm not at home, right? This is not Dubai. So go check that out. And then, of course, you got Whale Room as well listed below. So that is it from me, folks. Thank you so much for joining. I do appreciate each and every single one of you. And I'll see you all on the next one. Cheers for now.